Welcome to the course of Financial English. In this part, we'll talk about financial system in China. First, we'll go over the evolution of Chinese financial system. Then, we'll turn to financial regulation and its inherent weaknesses. The relationship between financial development and economic growth in China will be discussed in details in the third part. China has captured the attention of the world with its unprecedented growth for such a big country during the past decade. At an average growth rate of nearly double digits, China's GDP has grown almost 3 times the world average. It is now the second largest country in the world, behind only the United States. Throughout the past 3 decades of past growth, China has undergone tremendous structural changes in its economy. There has been significant and continuing industrialization, urbanization, and integration into the world economy. During the rapid economic growth, China's financial system has also undergone major changes. Generally speaking, there are 4 phases. The first phase started from December 1948 to 1983, when the People's Bank of China was the only bank in China's financial system. The People's Bank of China was engaged in both policy and commercial banking operations. This framework was dictated by a highly centralized planned economy. The second phase began in 1984, when the State Council decided to make the People's Bank of China as a central bank. The decision was made in response to the increased role of market forces in the economy and promoted diversification of financial institutions with the establishment of 4 specialized banks. That is, the Industrial and the Commercial Bank of China, the Agriculture Bank of China, the Bank of China, and the China Construction Bank, later known as the Big Four. The 4 banks are all state-owned commercial banks. They were established to take over the role of the People's Bank of China in allocating credit throughout the economy. Agriculture Bank of China was specialized in agriculture financing. Bank of China specialized in foreign exchange and trade financing. Construction Bank of China specialized in construction and infrastructure financing, and Industrial and Commercial Bank of China specialized in urban commercial financing. Due to the Big Four's historical background and strong foundation, the four banks are very large, with a huge client base, and together command the lion's share of the market in terms of public savings, deposits, and loans. Thus, the People's Bank of China ended its monopoly in the banking sector and was recast as the nation's central bank and the regulator and supervisor of the banking system. Then, the third phase began in 1993, when the State Council issued the Decision on Financial Reform. This decision launched a series of important financial reforms. The government introduced a comprehensive package of measures aimed at restoring financial orders as well as addressing the inflationary pressures and economic overheating, particularly in the real estate sector and stock markets. During this period, a number of important structural measures were taken with particular significance for the banking sector. The first was the unification of RMB exchange rates and foreign exchange markets in January 1994. Secondly, the passage of central bank and commercial bank laws in 1995 provided a legal basis for the banking system in China. Thirdly, the acceptance of the obligations of Article 8 of the Agreement of IMF in December 1996, namely commitment to RMB current account convertibility. This decision officially removed the remaining restrictions on international payments for trade and service transactions. Fourthly, the establishment of a unified interbank money market in 1996. This facilitated better liquidity adjustment for financial institutions. Fifthly, the gradual shift from direct to indirect monetary policy instruments greatly improved transmission of monetary policy and effectiveness of microeconomic management. Sixthly, the segregation of banking businesses from securities and insurance businesses contributed to the stability of financial system in the transition period characterized by massive institutional changes, inadequate regulatory resources, and inefficient self-discipline. In addition, 3 policy banks, that is, the China Development Bank, the Agriculture Development Bank of China, and the Export and Import Bank of China, were established in 1994 to facilitate the separation of policy banking from commercial banking businesses. The policy banking institutions are playing a special role in financing major infrastructure projects, promoting agriculture development and international trade and investment. Besides, an increasing number of other commercial banks have sprung up, like mushrooms, since the late 1990s. They include joint stock banks, urban commercial banks, urban rural credit unions, and post office saving accounts. Corresponding to the prosperity of financial institutions, laws were also enacted, establishing 3 new financial regulatory agencies in the 1990s and early 2000s, one each to oversee the banking, securities, and insurance industries. This frees the People's Bank of China of the responsibility to supervise these financial sectors. So, People's Bank of China can focus on monetary policy implementations